Howdy, everybody. Welcome to Liberty Call. Today is Monday, November 27, 2023. Hope everybody's had a fantastical day out there in the interwebs. Let me adjust my mic a little bit. There we go. Like I said, hope everybody's having a good day and a good weekend. And hopefully everybody had a nice long weekend after the Turkey Day. And I watched lots of sports, lots of basketball, lots of football. And Noel somehow managed to pull it out there at the end on Saturday versus the Gators. Woo! They still got to win the ACC championship this weekend, and then cross our fingers that they can get into the top four for the college football championship. So that should be exciting. You can see my boy Jake back here. He is thrilled. He's a huge football fan. Not really. Anyways, all right. Well, if it is your first time watching Liberty Call, I'm glad you're here. Thank you very much. If you could do me a favor, if you could give me some thumbs up, likes, shares, subscribes, follows, press the notification bell because you want to know when I go live. All right, let's get into today's numbers. Everything was in the red most of the day. Dow Jones was down 0.16%, 56 points, closed at 35,333. S&P 500 was down 0.19%, closed at 4550. NASDAQ down 0.07%, closed at 14,241. The VIX was up 1.77% today. It's at 1268. Canada was down 0.35. Brazil was up 0.09, and Mexico was down 1.36%. In Europe, Germany was down 0.39. The UK was down 0.37%. Same with France. Netherlands down 0.19. Spain down 0.03. Italy down 0.31%. Switzerland down 0.54%. And Portugal up 0.5%. Russian exchanges were both red. MOEX down 0.83. RTSI down 0.97%. And the overnights, the Nikkei in Japan was down 0.62%, Australia down 0.76%, New Zealand down 1/3. In China, the Shanghai was down 0.3%, the Shenzhen component down 0.55%, China A50 down 1.05%, DJ Shanghai down 0.38%, Hang Seng down 0.22%, and the Taiwan weighted down 0.87% for the day. So like I said, most things were in the red today, and not sure why. Maybe just some after all the buying that was done late last week. Maybe that's why things are on the upswing or on the downswing. All right, let's go ahead and get to the weekly economic update. Investor enthusiasm for stocks remained strong last week, buoyed by declining bond yields in a holiday abbreviated trading week. The Dow Jones Industrial Average picked up 1.27%. The S&P 500 gained 1% even. NASDAQ rose 0.89%, and overseas was flat at up 0.03%. All right, come on. There we go. All right. Falling yields lift stocks. The stock market continued to look toward the bond market for direction, responding positively to bond yields that fell steadily for much of the week. At a successful 20-year Treasury notes auction on Monday triggered a decline in bond yields. The release of the minutes from the Fed's last meeting buoyed investors' optimism that the potential for further rate hikes was diminishing. Investor sentiment was also lifted by the earnings results from a leading megacap AI-enabled chipmaker that topped analyst expectations, bolstering the narrative of AI's potential to help corporate profits. Despite a higher turn in bond yields in the final half day of trading, stocks retained the week's gains. Fed minutes from the October 31st, November 1st meeting of the Federal Open Market Committee were released last week, providing insight into its decision not to raise rates and its thinking on future direction of interest rates. The minutes reflected concerns by committee members that inflation remained stubborn and may move higher. The minutes also reaffirmed the messaging of many Fed officials, including Fed Chair Powell, that monetary policy must remain restrictive until they are convinced inflation will be on track for the Fed's 2-year percent target. They further said that further rate decisions will be based on fresh economic data, offering no indication that a rate cut was forthcoming, as many analysts are increasingly anticipating for 2024. And they've been talking about that for, I think, May is where they're targeting. At least the smart people out there have been saying that May 2024 would be when May or June is when they would expect. And let's see, the April-May meeting is on April 30th, May 1st. So probably the June 11th and 12th meeting in about 6 months. I personally don't agree with that. I think things are still going to be a lot rockier than they anticipate. Nothing is again, these are the same people who 3 years ago or 2 years ago were saying that inflation's transitory, it's no big deal, don't worry about it. Wow. Little did we know. Well, I was predicting it in the summer of 2020 that all this money printing was going to create a lot of inflation. But hey, who listens to some guy out in the mountains? Nobody. All right. Economic data this week. Today, Monday, we have new home sales. Tuesday, consumer confidence. Wednesday, gross domestic product. Thursday, personal income and outlays and the jobless claims. And Friday, the Institute for Supply Management Manufacturing Index. Just a few companies reporting earnings this week. Wednesday is Dollar Tree and Synopsys. Thursday is Salesforce, Marvel Technology, and Dell Technologies. All right. Well, that's everything in the weekly update that's of any real importance. And let's see if I missed anything. Nope. All righty. Well, let's jump over to the market recap for today. U.S. stocks lower in subdued trading ahead of key economic data later this week. On Monday, U.S. stocks exhibited a mixed performance, with energy stocks facing declines, while tech stocks maintained strength. Investors approached the market cautiously, awaiting key catalysts such as upcoming inflation data later in the week. The NASDAQ Composite, Dow Jones Industrial Average, and the S&P 500 concluded the previous week higher, marking the fourth consecutive winning week, bolstered by falling Treasury yields and moderating inflation readings that could signal a potential end to the Federal Reserve's rate hikes. We just talked about that. It's probably not anytime soon. November saw significant gains, with the NASDAQ surging 12%, the Dow Jones advancing 9%, and the S&P 500 rising almost 11%. Energy stocks were the primary drag on the market, impacted by declining oil prices in anticipation of the upcoming OPEC Plus meeting. Although oil prices ended a 4-week losing streak last week, cautious sentiment persisted, even as uncertainty diminished about OPEC Plus implementing deeper oil production cuts. Reports suggested that Saudi Arabia and Russia were likely to extend their existing output cuts through at least the first quarter of next year. So gas prices aren't going down, at least dramatically, anytime soon. The market's focus turned towards a range of economic data expected during the week, including the Fed's preferred inflation gauge, the Personal Consumption Expenditures Price Index, scheduled for Thursday. This data is closely monitored for indications of slowing price pressures before the Federal Reserve's meeting on December 13th and 14th. Analysts anticipated a modest rise of 0.1% in the headline PCE for November, down from 0.4% in September, while the core reading, excluding food and fuel costs, was expected to show a year-over-year increase of 3.5%, a decline from the previous month. E-commerce stocks, including Amazon and Shopify, experienced notable gains as investors celebrated increased consumer spending on Black Friday. I stayed home. It was disgusting here. It was just snowy and overcast, and it was like a Houston winter day. It just, no sun. We didn't see the sun from like Wednesday afternoon until probably Saturday afternoon, so which is unusual for here. So, I mean, there's still snow out in my yard. It only snowed like, this much, but it just isn't melting. Where was I? According to Adobe Analytics, Black Friday sales rose 7.5% to a record $9.8 billion compared to the same period last year. I'm not sure how they know that already. I mean, Black Friday weekend just ended yesterday. The positive consumer sentiment contrasted recent warnings from some retailers about weakening consumer spending amid financial pressures. Amid these market movements, Crown Castle International saw a 5.5% increase in its stock after activist investor Elliott Investment Management disclosed a $2 billion stake advocating for change. Conversely, Foot Locker Inc. fell over 2% as Citi downgraded the sportswear retailer from sell to neutral. To sell from neutral, expressing concerns that the challenging macroeconomic environment might compel the company to increase promotional activities, impacting margins. All right, so things are kind of, people are just waiting to see what's going to happen, and then also for the Fed meeting coming up in a couple of weeks. All right, last up, an article from our friends at First Trust, Mr. Brian Westbury, their chief economist. This week's article is titled, "Argentina is the Pendulum Swinging Again." This has to do with the election of Milei, the libertarian. Woohoo! Gotta love those libertarians. Everyone's freaking out, and there's also a bit of a libertarian streak going. I think Netherlands. My ancestors from Holland. All right, let's go ahead and get into this. At the turn of the 20th century, Argentina's economic prospects were promising, with a per-person economy comparable to Canada and Sweden and 2/3 of the United States. However, the nation's trajectory took a negative turn in what year? The nation took a negative turn with the election of Juan Perón, whose policies aimed at social justice through economic redistribution resulted in a rapidly expanding government sector, high inflation exceeded 300%, and a decline in living standards. Perón was elected in 46. In the 1990s, Argentina's attempt to address inflation by implementing a currency board arrangement pegging the Argentine peso to the U.S. dollar. This system initially succeeded in curbing inflation and fostering a decade of robust economic growth. However, it collapsed in 2001 and 2002 due to persistent government spending, leading to borrowing when the printing of new money was unsustainable. Sound familiar? The abandonment of the currency board contributed to a lost decade of growth and hyperinflation. A recent political upheaval in Argentina as liberal economist Javier Milei won the presidential election by a landslide. Shocking. An ardent critic of socialism and advocate for free market capitalism, Milei proposes abolishing the Argentine peso and central bank adopting the U.S. dollar as the national currency to prevent future devaluation. Hold on there, Milei. The dollar is trash too, so it's just better than everything else. So, I understand why he's doing it in the interim, but why not peg your currency to gold, silver, something that is a little more stable? The dollar gets devalued every time that the Congress and our government wants to spend more money on bombs and jets and things like that to terrify the people around the world. Let's see here. He aims to reduce government spending, including cuts to the social safety net and the elimination of various government agencies. Despite his popularity, Milei faces challenges given his lack of widespread support in the legislative branch. This shift in Argentina is part of a broader global trend where voters express discontent with large governments, America. Other recent elections in New Zealand and the Netherlands also indicated a desire for significant changes. The narrative suggests a pendulum swing towards smaller government driven by frustration with inflation and economic stagnation, making the appeal of reducing government size more attractive to voters. I guess unless you're a parasite who lives off the government, like a federal employee or one of those people. If leaders worldwide act on this sentiment, it could potentially have positive implications for investors globally, echoing historical shifts brought by the leaders like Margaret Thatcher and Ronald Reagan. Well, they were kind of leftist, but anyways. All right. Well, that's so just kind of is the world shifting? We've, over the last, really since World War II, the world governments, including the United States, have shifted very, very left. Want to control every little thing that you ever do, what you want to drink, what you want to smoke, what you want to put in your body, who you want to marry, everything is a federal issue at this point. And, I'd like to see everything go back to more, local stuff, think locally, act locally. And like my friend Brian McClanahan says, and, to me, the rules should really be set by the people in small communities, not, some global, hegemony over your, over in DC who says, well, you, Mr. Person in Colorado, you got to do this. Why? Anyways. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. Hope you have a wonderful evening, and I shall talk to you guys next time. Adios.